In part 5, we will be discussing MCLR policy transmission, importance of 2D's, degree and direction of change in MCLR rate for the borrowers, total cost of MCLR, where we will study the spread charges imposed by the banks over MCLR, which makes the total cost of the loan, and the CIBIL rating of the borrowers. So the policy transmission under MCLR ensures that the lending rates of the banks are revised on the basis of CRR, tenure premium, operating cost, and marginal cost of fund acquired by the banks. So any modification in the repo rate by RBI makes changes in the marginal cost of fund, and hence MCLR should change by the commercial bank instantly, so that the decrease in the rates would directly benefit the borrowers of the bank. If you are a borrower, so before taking a loan, you must take into consideration 2D's. That is the direction and the degree of change in the lending rate under MCLR. First D, direction, talks about the change in the lending rate. Is the lending rate under MCLR is decreasing with the decrease in repo rate, or is the lending rate under MCLR is increasing with the increase in the repo rate? If the answer is yes, the direction of change in the MCLR is same as the change in the repo rate, then second D talks about the degree or the percentage of change in the lending rate under MCLR. So how much is the effect of repo rate cut on the lending rates of banks has to be focused. Is the cut in the lending rate to the borrower is greater than the cut in the repo rate? Or is the cut in the lending rate to the borrower is less than the cut in the repo rate? Or is the cut in the lending rate to the borrower is equal to the cut in the repo rate? So this is the marginal effect of cost cut on the lending rate of commercial banks to the borrower under MCLR. So how much is the effect of repo rate cut on the lending rates of the bank is very important to understand. In this way, MCLR is very beautiful mechanism to find out the marginal effect of repo rate cut on the borrower. It is improved and advanced system compared to the earlier lending rate system in terms of finding out the actual benefit going to the borrowers by the commercial bank with the change in the policy of RBI. Now, the very important question under MCLR is, what is the actual lending rate charged to the borrower in MCLR system? So the actual lending rate charged to the borrower in MCLR system is the MCLR plus the cost of the spreads. So the spread factor is added with MCLR that will give the actual cost of MCLR to the borrower. If somebody is borrowing a home loan, then the actual lending rate charged to the borrower of a home loan in MCLR system is MCLR plus spread. Now what is this spread? Let's find out. So the actual lending rate under MCLR system is based on two factors, that is the MCLR, marginal cost lending rate, which we have discussed, and the spreads. The spread are decided by the banks, or we can say that banks are allowed to determine the spread that is added to MCLR to decide the actual lending rates. Spread depends upon two factors. Number one is the business strategy, And the second is the credit risk, which is very important. For credit risk, in case of individual borrower, bank will look into the CIBIL rating. Depending upon the credit worthiness of the customer, bank will set the spread above MCLR. So it is basically the actual lending rate at which the borrower will get the loan in MCLR system. So we have already discussed in detail the MCLR component, which is highly influenced by the marginal cost of fund, and that in turn influenced by the change in the repo rates. And the other side, the spread plays a very important role in deciding the actual cost of the fund. This spreads depends upon the business strategy of the bank and the credit risk of the customer. So the credit risk of the customer are decided by the help of the CIBIL rating of the customer. CIBIL score, which plays a very important role to find out the cost of the spread. Now, what is this CIBIL score? Let us see the CIBIL score in the next slide. Credit score plays a very crucial role in the loan approval process. Higher the score, higher is the chance of loan approval by the bank. Bank, first of all, look the CIBIL rating to know the credit score of the borrower. That will help them to know the credit risk of the individual borrower. So depending upon the credit worthiness of the customer or the borrower, bank will set the spread over MCLR. So the score range from 300 to 900. So the CIBIL score ranging from 300 to 900, and 900 is the highest CIBIL score of a borrower. Generally, the score ranging from 750 to 900, those score of a borrower are considered as an excellent score, and the bank has confidence among those borrowers because they have a regular payment history of their credit liability. So the impressive payment history and a regular and timely payment of credit helps the bank to identify the excellent borrower whom they can lend them, give them loan and credit cards at a lower risk. But as the CIBIL score goes down, the risk of the borrower increases. So between the 650 to 749 is the category of good borrower with a good credit behavior, but still not have the negotiation power. That is, they cannot get the best deal on interest. But from 550 to 649 are the fair category borrower who are struggling to pay their dues on time, and they are forced to pay the higher interest because their spread charges increases over and above MCLR. And the very poor borrower with a CIBIL score of 300 to 549, for that type of poor borrower with a poor CIBIL score, it's very difficult for them to get loan or a credit card because there's a very high risk of defaulter with them. So in that way, on the basis of the CIBIL score, bank decides the spread of a borrower over and above MCLR. If you have any question on this presentation, please put your question in the comment section and like and subscribe my channel to get further notification. Thank you so much.